So that was wonderful. No sound, right? Okay, folks. We're going to try this again. All right. I apologize. The sound was tweaked. So you are hearing me now, right? I'm sure you are. Anyway, let me try this again. Hi, I'm Bob Kendall, Kendall Report here. Just want to make an announcement before we get into tonight's video. And those of you that have already signed up for our live trading room, tomorrow we have a session between 1 and 4, and we're really close to launching an entire new platform, and we're going to have our own channel. It's going to be separate servers. There's going to be an iOS and Android app for real-time alerts when we start putting trades out. We had our first meeting on Monday, and I appreciate everybody that's already signed up. You go to kendallreport.com/trade, and you can get signed up. Right now we're on Discord, but that will change fairly quickly, it looks like. So we still have a few more things to work out, but we're getting pretty close to getting that out there. In tomorrow's live trading, we're going to be covering a lot of sector rotation, some thematic ideas, a lot of individual stocks. Wednesdays are going to be, for the most part, about stocks, cover some of the index activity. I'll probably go into more detail. And I will share some of those ideas with the YouTube community tomorrow night. So make sure those of you that are already signed up, if you haven't signed up, it's right there to get going. So let's get into tonight's video. We look back at yesterday. There's a lot going on. We had the S&P up 0.4, the NASDAQ up 0.8, Russell up 0.2, so that Russell continues to lag a little bit. 7 of the 11 sectors were positive, so we saw a lot of good rotation, right? Retail sales up 1.7, industrial production up 1.6. These are all better numbers. Housing index at 80, capacity utilization 76.4. All these are better than anybody was expecting on the street. And I know that I've been talking about the economy slowing down, and we're looking in the rearview mirror, right? So all of these numbers are from previous month, from October, and so these are still good. So I still have that theme that I think we're going to hit that wall and start to slow down. I think that will be interesting from that standpoint. I've got some things to talk about on the Fed tonight before we get into the technicals, but basically, you know, all these numbers are still looking pretty good. One of the things that I'm going to be discussing in the technicals here in a few minutes, I have some new projections. If you go back about a year ago, I believe it was in November of last year, I did a video on the channel. It's still out there, of course. It was called New Fibonacci Projections Rendered. And I got projections for the market last year when it was in the 35, 36 handle to go to 4605. Seemed like a pretty ridiculous number to look at, but we just got new projections tonight, and I hope you're ready for this. How about around 5,050 to 5,160? These came out of today's close. I'll go through the details here in a few minutes to unpack these for you, but these are insane numbers, okay? So whether or not we get the slowdown in the economy, I'm not sure that's what's going on here. Maybe magically they're going to find a way before this year is out to pass this social reconciliation bill, and maybe that will keep driving inflation, keep driving everything that we've been watching, right? So let's look at tomorrow real quick. Housing starts expected to come out 1.56 million on new starts, permits 1.62 million. Those are big numbers. I think we could come in better. These numbers on the housing are starting to surge back again in spite of labor shortages and materials and all that story that's out there. That seems to not matter, and it just continues to get driven higher and higher. Just a little bit of a mini rant on this, but I thought it's interesting right now, and I'm going to somewhat contradict myself in a way by talking about this, but all of a sudden I'm seeing the Fed, multiple Fed presidents talking about we need to taper faster, we need to do 30 billion. You know, everybody they're panicking, right? And that might be that they didn't even believe their own rhetoric. So maybe all of a sudden, because of this panic that you're seeing, this is internally one of those capitulation points where the Fed itself isn't even believing what they're saying, and now they're panicking, and you got dissension across the boards on some of these presidents that are out there. So that's an interesting scenario as well. Let's one of the other things that happened yesterday, the Dow. I remember talking about the Dow going to above the 95 handle. Well, we're trying to print 96. That rally in the Dow pretty much put the kibosh on the gold rally, and I'll unpack both of those. I'm going to cover the Dow and gold as I usually do every night. So let's go ahead and get into the charts and see what they're looking like. Yeah, so as we get into tonight's video, as I mentioned, there's some interesting numbers coming out and of the system. So I talked a little bit about this. I use these all the time on the channel, but this Fibonacci projection tool that I developed way back in the 80s, hard to believe it was that long ago, but it was. And then we actually put it into logic the first time, I believe, in 1990. One of my old companies called Intelligent Market Analytics. And so this indicator has a pattern recognition tool, and it can find key high lows, and then it automatically does some Fibonacci numbers on there. So if you know basic Elliott wave, one of the sequences that you can look at, especially in wave threes, are typical, that the wave 3 will be a multiple of wave 1. So in this case, this indicator actually does wave 3 will be equal to wave 1, and then it'll be 1.382 and 1.618 times. That's all it does. There's actually other Fibonacci ratios, but those typically will work in getting involved. And as I mentioned earlier, the 4605 level that I projected last year came from this same tool, ended up to be pretty accurate, and there were some other numbers out there. That was the minimum number, was 4605. So what I want to show you here tonight, we'll go through start with the EMinis as always. And looking at the EMinis, let me bring up this projection here. You'll see a couple dots up here. I'll put a cursor up by them. 5077 is the new Fibonacci. You'll see them on the screen down below. Let me zoom in on that for a minute so you can see those. You'll see high target 5077, 5249 on this cash, and the numbers I was just talking about were actually the off of the cash. So this is the futures numbers. So they have similar numbers. Futures actually have a little higher projection on that middle level. So we're just seeing this thing starting to explode. And what's likely to happen here, and I'm going to go on when I get into the SPX, I'll actually go into a little bit of detail tonight and setting this up from the standpoint of what the pattern looks like on the weekly charts. But we're in, and I talked about this the last couple of nights, in that trend maintenance mode that I talk about on these indicators, where you get the ramp up, where momentum surges, and then it goes into sideways. These indicators all go into a sideways range, but what they do is they maintain themselves above into a positive trend level. And that's exactly what we're seeing here. And this type of pattern is very bullish. Let's just look at today from the standpoint of what's happening here. I've talked a lot about it. This 10-period moving average has been dominant through here. We've just managed to stay just above it every day, hovered around, I think, only one day we were below it, and this was right where the pattern just continued to drag on. What we're likely to see over the next several days is the market start to turn up. These PPMs will just kind of turn up back into the first and second derivatives, and that'll just be the maintenance mode that we're looking at. So if we look at the projections for today, actually I want to go back to yesterday just for a minute, because I talked about the possibility of an S1R2. Well, we printed above that. We actually went almost to an RTX yesterday. So we saw a big surge in, as far as the volatility goes, we were able to trade up at the extremes of what the volatility levels are allowing for. So for today, look for, I actually don't see us getting down into the S1 handle, which is 87, but looking at R2, between R1, R2 is 47.05, 14. So look for S1, R2. I think we'll continue to see this thing move up. The absolute downside for tomorrow will be around 46.87, and that would represent not a lot, 11 handles negative. At the moment, as you can see on the futures, we're up 275 at the moment. Let's go to the SPX, because this is where the big story is being told on the cash markets. Once again, those upward objectives up here are that are signaled 5,019, 5167, and then 5259. And it's interesting, as I just showed you, the numbers on the futures are projecting higher prices, but they do tend to diverge a little bit just because of the longer trading hours that the futures have. And we've seen a lot of times where we see spikes up and down. The range on the futures are usually quite larger than the cash market is. So what we're seeing here, though, is interesting. So we have that new objective, and we look at the grid for tomorrow, S1 93 to 47.17. I believe this is the high here, 47.18. So it's very possible we could print an ATH tomorrow, all-time new high, and then start this acceleration on the upside. Let's go to the weekly for a minute here. And this is something I've been talking about. There's also objectives here on a weekly that I've talked about, 49, 54, 50, 70. So these map out perfectly with that minimum target on the daily chart that's setting up. So we're seeing similar patterns. We're also seeing on the PPMs here, PPM 1 is at a plus 0.54, 0.45, and 0.45 PPM 2 and 3. And what that's really suggesting is that angle of attack that we're talking about, that I talk about all the time, is what's in play here, and that we're going to continue along this slope that we've been in for a while. And this is exactly, I'm going to draw just a couple things on to remind you quickly that what I was just talking about, that angle of attack looks like this. This is where this goes way back. So we're looking at in April here, but I just want you to see this. This is exactly how these indicators work. You get this big boost, and then you get into the angle of attack. So it's sort of like, it's actually an aviation theory, and I'm working on some videos, as the plan is to be releasing the PPMs on TradingView not too far in the future. And I want you to understand the theory behind this, but it's very similar to, not similar, but it was derived from aviation. Think about when you get a plane, you have the steep slope to take off, and then you level off, and you kind of keep climbing gradually. But the initial takeoff is that burst. So that's why you get this. As long as these things maintain that angle of attack and that upward slope, it could be a downward slope if we're in a bear market. It works the same way. We just have negative numbers and an inverted type PPM. But this is the theory that runs through everything that I do inside of our models in the software, all of this stuff. This was developed back in around 1983, 84, actually, when this theory was evolving and continued to evolve through the late 80s into early 90s. So this is a long-time theory for me that I've used, and you folks have been watching me, a lot of you, for a year and a half, working on 2 years now. So it's very consistent in what it developed for us. So this angle of attack, especially when we get into the weekly, and more importantly, I'll flash it up on the screen, I won't zoom in on it, but just to bring it up, is when you get into these longer term, like monthly secular trends, this trend is absolutely insane. We have massive upward slopes in all of this. This angle of attack is really suggesting there's a ways to go, and being a monthly chart, it will take multiple months. It could take a better part, it's going to last 8, 12, maybe more months, so we're looking at a year out. So this is getting pretty insane. And I always flash back to a moment that I had in doing one of my live streams I did last year, and some of my rants I went on, and I said that your best inflation hedge is the S&P 500. And I remember talking about ridiculous numbers, 5,000, 7,000, 10,000. There's some crazy numbers that are likely to happen. And I hope you guys enjoyed my Dan Aykroyd clip last night, because it was so timely, is that, inflation is good. It makes everybody feel rich. It's kind of a funny story. But the bottom line is, these angle of attacks, these trends that we're dealing with, are like nothing. I've been doing this for 40 years. I've never seen anything like this from a sustainable viewpoint. I've certainly seen some big rallies going back to, in the early 80s and into 87 high, and going through the crash and going. I've been through everything since 1979 that the markets have had to offer. And I can tell you, I've never seen this one before, okay? And we know it's being driven by the Fed. They've way overplayed their hand, but now it's running out of control, and they're panicking, as I said in my opening comments. So that is going to be a really, really big deal on that standpoint. But this is a substantial element here that we need to kind of deal with going forward, because I've made this comment many times. If you read like Ralph Elliott's original works back in in the 30s and 40s, one of the things he always said, it's the hardest thing you have to do is believe what you're seeing. And I'm telling you folks what I'm seeing here. And the support levels on the secular charts and all this stuff are really crazy. So I think enough said on that. Went a little deeper than I wanted to. Let's go ahead and take a look next at the NASDAQ. Let me go over to the daily. So here's the same projections, by the way, on the NASDAQ. Yeah, I don't think it's going to hit 5160 by the 31st. That's only 6 weeks away, but who knows? Anything's possible. But let's take a look at the numbers here on NASDAQ. This is a daily NASDAQ. New Fibonacci projection, 17,977, 18,772, 19,263. So just as crazy numbers as we were seeing there. And the pattern that unfolded, if you recall, when we got these cycle highs that came in, I was expecting to move back towards around the 21 period moving average was the target. We fell just short of that on this particular day, on the 11th. The average 15,738, 15,976 was the low there, but that came right into that pattern. And as soon as we get a breakout above this 16,448, we're pretty close to it. We get through that, then all these numbers are going to be confirmed, and we should start to see things move higher. I just don't see at the moment, even though PPMs have bled off on a daily basis, I don't see anything going from there to cause anything different. So from For tomorrow's outlook, S1 16254, R2 16398. We already printed 16312, so that's not even a big deal. Could even see S3 16450. So the Russell does not want to disappoint. It also has a new Fibonacci projection, 2587, 2665, and 2714. You'll see these dots up above. That is what they're doing. I talked about the cycle low that is coming in. Looks like we're ready to print that higher. The futures are down a little bit overnight, no big deal. But we'll need to get a breakout to confirm this over this 2458 level. So we still have some challenges here. We're still trading just below the 10-period moving average as that goes. I'll just flash over to the spread just for a second here. What we're seeing here on the spread is continuing, just kind of backfilling here. And I think what the likelihood of what we're likely to see here going forward is that this spread will start to get some traction, and I think we'll play some catch up with the Russell and the NASDAQ going forward. So a good point here. Let's, since I went on a couple big rants, let me come back on screen. I'm going to go check the numbers on our database now. We do that mid-roll now instead of where we used to do it. So we'll come over here and hit the research. I'm going to go to daily and then hit the research. I'll bring this up. I'll zoom in on it for you here in a second. So we are definitely increasing. We're now up to 64.4 bullish. Zooming in on this number so you can see it. 64.40. We got about 310 buys, a little bit of rotation going on here, but we got a positive on the long. So, and actually I believe we were at 65. So this is a little bit of a downtick. I don't have those numbers in front of me right now. We were at 65, so this is a slight downtick. We got 650, roughly 690 sell signals and about 310, about a 2-to-1 on the sell side. So some rotation going on, but we're still well above in the 62 plus. And like I said, we're probably going to stall on this database. Maybe that's what we're starting to see. And we'll start to get some rotation in here. I don't think we'll get much above 68 to 72% on this as we go forward. So not a lot there. Still maintaining some decent numbers. You know, we've got 16,375 symbols in the database. So there's a constant rotation of things going on there. And so that's what we're seeing in that. Okay, so let's go ahead and what I want to go through in the balance is we are going to do the 10-year, going to do the Dow. I think there's some things to talk about what's going on with the Dow. And then we'll get into crude oil and gold, and we'll end up with Bitcoin, which is trying to bounce off some pretty good support right now. So I want to get to that as soon as we can, because I do think there's some opportunities. But everything we're seeing and all of these major indexes are suggesting there's much higher prices coming from the standpoint of Fibonacci projections. Doesn't mean they're going to happen. We still have some confirmation points to go through, but a lot of times these numbers, they come into play, and they'll come into play as we get confirmation. So there's still confirmations that needed to be happen, so I will stay on top of that as we go forward. So in last night's video, I talked about the 30-year as well, and it's got some interesting things going on there. what we're seeing, this is the 10-year. Once again, we're continuing to see this climb up. This is the daily. We looked at the grid yesterday, talked a bit about that. 164.40 was probably going to be around the high. 160, R1, 1.63, R2, 1.64. So we got there on the downside. Basically, we hit an S3. So there was a little bit of a dip on yields, and then they just came back, running back really hard. And this is something that, you know, we continue to see happen from the standpoint of this upward trend that's forming. The PPMs are starting to scream again on the dailies. We go over to the weekly, and I'll tie this together because I'm going to go to the Dow next. Well, what's happening here is we've seen Europe got almost up to zero, right? And now they're printing back down. So the differential at the moment, when we start looking at these things, are getting close to 2%. We're they're, I think, minus 2.3 in the Bund. From that's the 10-year Bund is at that level, minus 0.23. So we're at 1.86 or something on the differential. So folks are piling in, even though these rates are going higher. They're buying a Dow here. That interest rate differential is driving that, and of course I'll go through that in a minute. But this weekly trend is still very strong, and we're seeing another positive rotation. The upward slope here is the major support 1.53, probably going to stay above that level over the next couple of weeks, and ultimately heading to retest 1.75, and then looking for 1.84 plus, which would be the 200-week moving average. So let's go to the Dow, and I'll stay on the weekly. And I did talk about this the other day, this pivot level that's out there on the Dow right now. It is 95.62, and we're very close to breaking up. We broke above that number, and so all of a sudden we're going to start to see some acceleration on the Dow. I mentioned the other day that these objectives, even over here, that we could actually see the Dow go back to the 100, and a lot of this is happening. You have to remember this index, I believe, is 56% Euro dollars. Okay, so this is really weakness in the euro that's being reflected in this index the most, but that is driving this market, and it looks like we're going to see some pretty amazing numbers printing over 96, but ultimately possibly getting to 100 here on the Dow index. And I'll get some very specific targets as we go forward. So just keeping that in mind, let's go over and take a look at gold. I'll do gold, and then I will do. Then I'll do crude oil, kind of an inverse in what I normally do every night. But let's take a look. Gold got whacked pretty good. It traded all the way up to the RTX number 1887.30 was RTX. 1879.50 was, let me get this right number here, folks. I'm in the wrong spot. There we go. 1879. We got up to just about R3. This is daily, yeah. So we definitely pushed up in those higher levels, 1870, and then it just reversed all the way down 1851, closed at 54. We are seeing a little bit of a bounce, but what's coming in here is that 10-day moving average, 1842.60. In spite of that sell-off, the PPMs are still turning up. So just because you get a little print up there, that doesn't mean that the market's rolling over. We're still seeing that upward slope, that angle of attack is still very positive. In fact, it's at 0.50, and that number is just below the market at 1852. So the expectation here is that level will hold. There's actually about a 70% chance that 1842 would be a low if we printed down any lower, and that's a pretty high probability. So 7 out of 10 times that the market's going to hold that number. And even if it breaks, it's going to snap back. It's just way too big of a number, especially with the acceleration that we're seeing here. So it's still in that, we'll call it liftoff phase on after we get this initial surge. Now we're setting up my favorite formation, a little mini dragon head. We ultimately should start to print into some of these fib objectives around 1889, 1911, once we get through this little consolidation. But everything is fine here, so nothing changed from that standpoint. So here's crude oil. This is becoming somewhat interesting. I've been talking about the low 79s being a low. I'll go through daily and then cover the weekly. But the targets here, there's some new Fibonacci targets got thrown out of the system just today. We're now looking at extreme low target 1, 77.32, 74.79. I don't think those are going to hit. I think we'll see the 79.06 level will continue to hold. We printed a 79.20 low, and we got this little pattern that's setting up here along these moving averages. So I'm going to go to the weekly and show you, but the PPM1 is already turning up in spite of this 1.77 down overnight. So let's take a look and go to the weekly. And this will be the driving force. 78.01 should be absolute extreme on a weekly basis. I talked a bit about that. We look at the grid. 78.46 is S1. R1 81.08. We're trading in between S1, R1 at the moment. Actually, we printed just a slight under S1, so we've hit that. So my expectation is that we'll continue to ride this. We've got big uptrend numbers. PPM1 is at 1.49, which tells me there's very small probability of any sustained move below that level. So 78.01 is the drop dead level. Okay. Let's get to Bitcoin, and I just want to change this value just so you can see it. This is a number I've been talking about, and it's going to be really important. As you know, this is the weekly chart that I'm bringing up here, and the yellow dots here is that pivot 60,612. I talked about last night, we could trade down to this 10-period moving average. We're trading basically STX 59,649. We printed down to 58,702. And that 10-period moving average right now is 56,900. We'll round that off. That should be a sustainable level. I thought we'd come down into this level, but this is what it looks like. So I would call buy the dip is you should have really good support here at 56.9, we'll call it. And that number's not going to change. This chart updates Sunday to Sunday. Let's go backwards to the daily. This is getting somewhat interesting. We now have low target 59,988. And so far tonight we've printed 58,702. Let me get those exact numbers here. Low target 1, 59.88, 56,560. So that middle target is actually going to be equal to that 10-week moving average. So that somewhere down in there should hold. What's interesting about this pattern is we are turning over. The PPM1 is at a minus 0.33. That's going to be substantial resistance 64,218, and that's dropping every day about 200 points at the moment. So we're going to get sandwiched in here, possibly trade down that 10-week moving average is what it looks like from my viewpoint. So folks, sorry about the no sound. Sorry about the no sound as we came on. Let me go back to this page. Yeah, apologize. I had turned the mic off and forgot to turn it on. So my bad. Anyway, folks, if you're part of our trading group, once again, remember, really excited about, our new app and everything that we're putting together. Been busting tail over here trying to get some things together. Well, we're going to resume a lot of our software training and other stuff next week. So we're busy, as they say. So appreciate everybody participating in this channel and being a fan or a customer. Thank you so much for watching tonight. And we'll see you tomorrow at 1 p.m. on the live trading room. Thanks a lot, folks. Yeah, it is a subscription. Yeah, you can use a credit card with the PayPal. You just click on Pay by Credit Card. No big deal. Now it's a completely different product. It's really not, yeah. We're working on something for the community. We've got our hands full at the moment, but it's going to be exciting. Thank you. That was for you, Keith. Thanks, Gary. Appreciate it. See you, folks.